Hello, 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 everyone. Happy Sunday. How is everyone doing? Can I get some more comments in here? I'm trying a new setup today. I want to make sure it's working before we really get this week kicked off. I see some. Hello, Patrick. Good evening, Charles. Happy Sunday. Howdy, happy Jack. Hey, Connor. So just get some more comments. I see there's more people watching than commenting right now. All right, I'm trying some things. Trying some things. Also, if anybody has some extra windows open, or could you see, I'm broadcasting it now on my own private Twitter feed at MG Arnold, the Path Trading Twitter feed. I want to know if those are working. Hello, Anissa. Thank you, Patrick. Hello, Mike. So I also, if somebody's on Facebook at all and can search for Path Trading Partners, it should be streaming in a different way to Facebook. I'm still trying to get Instagram and LinkedIn going, but we're going to keep broadcasting this. So if anybody can check on those and let me know during this broadcast, I'm also going to be able to bring on additional guests. Maybe we can get on Jim Iurio, also Bob and Jim at the same time on one of these live feeds. That would be fun at some point. So going to be working on getting this setup modified to make it even more powerful. So thank you. Comment, comment, comment. Well, that's some good comments. Hey, Lori, how are you? There we go. Mike. Now, well, Mike, real quick, which channel are you watching on? Because I'm getting you coming from a restream comment, which I'm still doing some stuff. Let's see, Twitter's live on Twitter, looking good. Could somebody check both the Twitter feeds, the at Path Trading, at Path, what is it? I forget now, Path _ trading, and at MG Arnold, and let me know which one. I'm just trying to figure this all out. Sorry for this housekeeping things. I'd rather not do it like on a Monday morning. So let's see. See on the Path website, got an echo, huh? Okay, on the Path website, that's interesting. Twitter is working. All right, just keep the feedback coming while I keep going. I'll have to spend some time working out the little issues. Thanks for the thumbs up. Again, let's get this started. Let's see how if we can get going with a lot more channels, a lot more people coming in, if we can help a lot more people navigate these markets. Oh, look this. With a new way I set it up, I can actually ban people now from the power of my own chair. Oh boy, Coco, better watch out. Let's see. What do we have going on? Both working on Twitter. Thank you very much, Anissa. I really appreciate that. I really appreciate everyone here and everybody's help too. Thank you so much for making this a wonderful channel. Couldn't do it without you, without everyone. So let's get through this. I don't want to waste a lot of people's time. Oh, I'll echo only because I have audio on both. Well, then you get to hear me twice. Oh, yes. All right. Monday, we have nothing going on. We got the 3-month and 6-month bill auctions. By the way, not necessarily, if people are looking for, besides using short-term bills and T-bill ladders and everything else, again, if you want me to go more than that at some point, I can. If you're looking at a good CD rate to park some money in for under a year, I'm just going to put this out there. This is for U.S. people. But if you're looking for a CD rate, if you don't need to touch money and you want to park it and get a halfway decent rate of return, especially if you're like me and expect the market to roll over again sometime this year, Capital One has an 11-month CD. It's fully FDIC insured, but it's through their Capital One banking system. You can go do it online. But for an 11-month CD, it's a 5% APR. So if you're looking to park some money, so you're getting 5% for only 11 months. Something you might want to consider if you needed to park some money for a while and you didn't want to do T-bills. Or you don't want to like actively trade. I know a lot of people are holding off on their longer term investments, so you might as well get a pretty good rate of return locked in Nothing hurts there. Just giving people other options. That deals, I think it's good through the beginning of March. I'm always looking for places to park some cash, risk free because it's FDIC insured at good rates of return until we get those long term, not just the trading things, but the long term investment really geared up again. T-bill, we'll talk about that. I'll do that. Are there any options? Well, you can always do T-bills. You can just buy T-bills through treasurydirect.gov. And when I talk about T-bill ladders, I like to roll them into shorter T-bill ladders, which would mean I'm going to go into not all my money at once, especially if I'm doing like 3 month. I'm going to stagger it. So I got money rolling off every couple weeks or every month. So then for depending on what's going on with the investment horizon, when money rolls off, I can either, if we're now at a long-term position for going into some more positions, well, as that money rolls off, in stages, I can start finding the long-term opportunities. If there's no long-term opportunities, then I can do a reinvestment into the next T-bill. Because remember, if we're going to listen to the Fed and they're going to hike and then pause for a while, these rates can remain higher. So T-bills or some of these CDs, like I just said, can be good depending on if you need the money more liquid or a little less liquid, can be good options while we're waiting for the really solid place to just, all right, I can put some money in this. I got it. What I like to look for in longer term stuff too, I like to look for great weekly and monthly buy setups. And those can be in key stocks for long-term stuff after we get some bottoming moves, after we get some pullbacks, where, look, I'm going to manage those stops on a month-to-month basis. Most I'm going to monitor them weekly, but it's not something I'm going to touch. I don't care if it pulls back for 3 or 4 days. I don't care if it goes up 10%, pulls back 3%. Then I'm not trying to micromanage that position. I'm trying to get things in really good long-term positions. And yeah, if I think we're going into more of a topping, like a monthly or a little shorter term top, I can always write some calls against it or something else. If I'm looking to accumulate, I can write some cash good puts to try to accumulate the stock, but then I'm not looking to touch it. Like some of the stuff we cover on here, it might be, I could be in a position, or the trade could be for a week and a half. That's not what I'm talking about. That's with the liquid trading account. I'm talking about things you're not going to touch for a while. You're not looking to get in and out of. All right. All right. So let's get through the quitter. Then we'll get through what else is going on. So I put 33% in T-bills with Treasury Direct, 20% by buying bill. Okay, there you go. That's what you're doing. What I like to do, Treasury Direct makes it real easy. Treasury Direct, and I like to ladder it. And you can also go through the secondary market on bills too. On your bigger trading platforms, Interactive Broker, Schwab, if your account is enabled to trade treasuries, you can go to the secondary market and trade them. All right, you've got a laddered and auto renew with Treasury Direct. Very good. Hello, Amit. Hey ho, Waka. JPY. We'll take a look at all this stuff. Happy Sunday, Daniel. New high this week. Coco, is the market ever pull back for you? By the way, you got to be careful. I got a ban button now right next to you. You got to be careful with your comments. I don't have to agree with you, but I don't want to hear the same thing every time. Well, thank you, Charles. When will the debt ceiling become an issue for the markets? I don't know if the debt ceiling will. I mean, it could. It's not going to default. Somebody will blink first. Somebody will blink. Now, it'll be turned into more of an issue. it'll be turning more of an issue, and it might remove some of the liquidity to the markets that the Treasury's been providing. I don't want to go into that right now, so to sort of counteract the Fed tightening. But when will it become an issue? Like, oh my gosh, it's going to default. We're not, I don't see that happening, and it's not going to. It'll blink before the default. Recipes still allowed? Yes, recipes are still allowed. So Tuesday, what do we got going on Tuesday? Tuesday. See, is my camera still good? I had to adjust a bunch of things. We have not much balance of trade before the open. We have economic optimism from Investors Business Daily after, 30 minutes after. But the big thing I'm going to start watching, we have Fed speak. We have Fed speaky this week. Why am I paying close attention? Because the market said, hey, you sounded like you're ratcheting stuff down. You're on a wait and see approach. Even Tim Ross is trying to counteract that if you're following what he's saying. He's a great follow on Twitter, by the way, because you can sort of get some gleaning into. So I want to hear what comes out of Powell's mouth or Barr's mouth. We got Williams speaking on Wednesday. You got a bunch of this stuff. Who else do we have speaking while I'm on this thing? Nothing on Thursday. And we got Waller speaking on Friday and Harker. So we've got a fair amount of Fed speak. Are they going to come out and try to tamp down, thinking the market's getting a little ahead of itself? Or are they just going to say, hey, we're data dependent. We're still on track for those 25% basis points. We still think the terminal rate, I'm going to see what they're stressing for the terminal rate this week. Okay, to see if they're still saying 5%. Or if they're going to take anything else into account, like the strong jobs report from non-farm payrolls, even though it was, you had the seasonal adjustment for January. But we're going to see if any of that plays into what's going on with the terminal rate. So that's why anytime I see Fed speak this week, I'm going to be paying very close attention to it. There aren't a lot of other market rocking numbers. So really it's going to be the Fed speak. EIA numbers, of course, on Wednesday. Initial and continuing jobless claims on Thursday. And that's it for that. Then consumer sentiment, preliminary numbers for February. Remember, there's a preliminary and the final. This week is the preliminary. And then we have Waller, and I already said Harker, and we have the rig counts. So that's it. In case you need a reminder, Apple up big, Amazon and Google after filling the gap, turning back over. So let's see if this continues. Daily and weekly cycles at the top area. Friday, we had consumer cyclical, communication service and utilities and real estate leading the pullback. But for a 1 week basis last week, we had comm, services, technology, and industrial still up really strong. Look at comm services up 400 basis points. Fed watch. So we still got that 82% of a 25 basis point for March. It's actually pulled back a bit on Friday. And then May is really close between the pause and another 25. So I'm actually flipping back and forth between March and May to sort of keep an eye on the roadmap. Fear and greed. I put on my own Twitter feed. If you don't follow me, I don't tweet out a lot of my own stuff, but I do retweet things that I feel. Sometimes I'll put out some stuff, but I do retweet a lot of things that I think are important. And one of the tweets I retweeted this weekend was somebody mapped the extreme greed, this fear and greed index to when the market tops and bottoms. And this is one of the reasons I retweeted it, because I think it's a pretty decent. I don't follow a lot of this public, easily accessible stuff, but the way this gauge is set up gives you really good areas to watch for topping and bottoming timing patterns. And we are in extreme greed. Also, I did record the Market Futures Edge podcast on Friday. Should be dropping tomorrow morning. So you'll hear me talk about secondary reactions. Also, current market valuation. Let's see if this got updated finally. So I forgot to refresh it. Don't want to waste anybody's time. Is it not yet updated yet? So I'll have to wait that for a little longer. Earnings, we still in. Last week was major for tech, but this week, what do we have? Tomorrow morning, we got Tyson. Not much. Not much. After Activision Blizzard, Pinterest, sort of not much that's market moving. Not much that's really going to market move tomorrow. So tomorrow's a very quiet day. Tuesday, we got Royal Caribbean, British Petroleum, Hertz, DuPont, but nothing, again, market moving. After end phase, Chipotle. I always love Chipotle. Again, not market moving. We'll be keeping in look at end phase. Slapping solar on the roof this spring and using end phase microinverters. So Wednesday we got Uber and CVS before the open. We got Disney, Robinhood. Again, nothing. Annaly, we'll see about what's going on if there's charge-offs there going on your firm. So PepsiCo Thursday, pretty decent. Kellogg's, I like to watch those for passing stuff along to the inflationary aspect to the consumer, since those are big consumer staples. PayPal after the close, which had its layoffs. What they announced, 2,000 layoffs. And then that's about it. So we have some interesting companies, but not a lot that's probably going to rock the markets. Let's see who else is here. Hey, what's up, Christo? They'll, you know what's going to happen, Happy Jack. You think they're going to shut if it's a shutdown, you know who? I'd like the government shutdown, but we're not going to default. You know, can't we just shut down? Maybe let's just shut down let's shut down the government until the next election. Could we do that? Oh. Well, where do we sit? Where do we sit? Powell's addresses the Economic Forum Tuesday. So I have to look up exactly what each Fed speaky is doing, but that's where we sit. Now let's get our macro, since it's Sunday, our macro look. What was interesting to me is on the daily, we didn't get a divergent setup yet. Remember, we've closed above the 62.5 back on the 23rd of January. And my next key target is still higher. Now, we have that pullback pattern that's not triggered yet on that 4-hour. So we could get that little pullback, still watching for that 4-hour close, especially going Sunday overnight. I need at least a 4-hour close. No trigger on shorter time frame, and because it's a 4-hour, I wouldn't even trigger it on the 1 hour. I'd rather wait for that 4-hour close and then a little retracement if I couldn't get reward to risk. That's for that minor pullback. With, again, cycles at the top after a little dippity-doo. That's the technical term, the dippity-doo, back to the top. That just takes us back in the rotation zone and the prior major support area. And why didn't that go? That should have been on. There we go. Come on. There we go. Let's see. Weekly. Come on. Come on, mouse. Don't fail me now. Weekly. This is now. There's no weekly divergences. We don't have divergences yet with the strength of this push-up move yet. We do have weekly at the top, but we don't have it rolling over yet. That's why I can get minorly bearish, but not overly bearish. Minorly bearish if we get the pattern. Otherwise, it's still trailing mode. And depending on when you entered, it's how aggressive you are with trailing mode. I.e., a play from last Wednesday is very aggressive. a play from even at the beginning, end of December, beginning of January is less aggressive because I wouldn't want to just bail on a little position from back here or even lower back in November and other stuff, and because of this little pullback. I need a bigger topping pattern. But from a Wednesday or a Tuesday, Wednesday, Thursday sort of entry breakout, remember we've got into the rotation zone, rotation back up. That would be a much tighter stop level. NASDAQ. The NAS also has that 4-hour potential topping pattern. Where would that take us? Pull back to the rotation zone and slightly into it. Doesn't even get us to this major breakout level. Doesn't even get us to, we have the minor breakout level right here at 12,225 area. The major breakout area was about 12,080. So this keeps it in front of the major breakout area. Now, we don't have, see, the RSI against higher, so I don't have those divergences yet. So I'm going to be watching after some kind of pullback, if we get it, the secondary reaction. I'm going to be stressing secondary reactions. So if you don't want to hear me say secondary reaction a bunch this week, this is a good week to skip the live streams. Daily, still trying to roll over. Weekly at the top, but not confirming a rollover just yet. And the potential full time, I'd really be paying attention on the NASDAQ to about 12,260 for the really setting up a reward to risk on that. Dow, until it gets out of this, at least until we start breaking below about 33.6 or breaking above 33.5 or 33.450, I'm not interested in anything. It's just a mess. I'm not even going to keep those little harmonics up there. This is just an absolute mess. So, Dow's just caught in a huge consolidation. Huge. I mean, look at it's been in this range since, really entered this range back on November 10th, and it's been stuck in this range ever since. Russell does have the potential topping pattern. Remember to finish that cup and handle. We're looking at 2020. Also, we have a key major overhead resistance. Now, Russell has the potential to trigger. Would be very interesting. And I need a weekly close to trigger this other double. A weekly close. But cycles at the top on the daily and weekly. Just a little pullback. Look where that takes it. It only could potentially come back down 2 days worth of price action back to the rotation zone. Not even, I mean, the major breakout area is back from here about this 1900. The minor breakout area is 1920. So this doesn't even put a dent in that yet. The DAX. The DAX, there's no double yet. I'm going to be watching to see if the DAX does rotate up here and puts in a topping pattern. Other than that, the DAX is still just in trailing mode with the potential pullback area with the daily rotation zone. Nothing else. Still targeting the DAX for this 15,700 area. The notes, we do have a potential topping pattern. We need the close above 114.05. Technically 114.05 and a half, but 114.05. And that could pull us back to the lows established at the end of December only. So that's a short term. And there's a fair amount of support down there too. What would get me even more bearish on the 10 years would be then if we got a follow through close below 111.19. Then because longer term viewers know that key level right there. Dollar index, this one I'm going to be paying a close attention to this week. We have that substantial 2-day reversal after not getting to parity, 100. If this keeps marching, This could get the rollover in the markets going and also more of a pullback in some commodities. Next target, the next major target is about 103.50. Next major target, and you see 103.50 is between the weekly rotation zone, and then the target above that's about 104 with the hooking over 50. So there's a lot of still resistance overhead, but we could be getting from weekly cycle bottoms and oversold conditions. We could get easily a at least a couple week run, not every day, but overall we could be higher potentially for a couple weeks. So that one's going to be key. VIX is still asleep. Nothing to talk about there. Crude, which stopped out the buy pattern. I'm now watching for a return to the $71.50 to $70 mark. Other than that, breaking down from this flagging pattern. You can see that flagging pattern really nicely on the weekly. Could not get above the weekly rotation zone. Stopping out that daily trade, not above the weekly rotation zone and rotating back down. Be interesting to see if it breaks this $70 area. Remember, we still have a final target on the overall massive double top pattern on the weekly. The major target is 61.85 area. I would not ignore the 200 week coming in right here also. Look at that. This key support on a key closing weekly closing basis from November of 21, right in line with the 200. So if we do break down, there's going to be major support in here. That's where I'll start watching for another potential bottoming play. Nothing yet. Gold, again, Thursday outside key reversal day, closing below the lows of Wednesday, and then Friday kaput. This was trailing mode, talked about it. It took forever to get that topping pattern in. Now we've got to the bottom of the top of the weekly rotation zone. We could get a minor secondary reaction here. I'm still watching for potentially a bigger pullback with weekly cycles topping and rolling over. So I am not, and nothing's aggressive from the bullish side in gold. Nothing, again, with this break above and then snap back in and then the break the other side, this is like a modified shake and bake pattern. People getting sucked in and then it closed back down below the midpoint and then followed through the next day. I'm still paying attention on a bigger silver pullback. There's still a gap left behind from the end of November. That gap fill would be 21.78. So I'm not standing in front of anything. There's no bullish pattern just yet. Copper, still watching for a potential bigger pullback. There's no bottoming signal in that yet for a reversal. Copper also back to the top of the rotation zone. So anywhere in this area, I'll be watching for at least a rotation play back up, but nothing yet. The 10 years, hovering right near the 50 basis point for intervention levels. So going to be keeping an eye on that after a strong rally on Friday in the yen catching on that 62.5 area and then follow through to the upside. I will be watching for another rollover play at some point, but nothing yet. And this is not a double. So hands off for any short plays for the time being with the US dollar, Japanese yen. Decent reversal in the euro after very overbought with cycles rolling over. So I'm watching my minor areas about 107. I'm watching for a potential bigger pullback to about 106 with the 50 up here. So that's going to be a key level that I'm paying attention to right there. For some follow through. That doesn't mean every day has to be lower in the euro, but I'm watching for the continued breakdown play. Short term, 107 to about 106.60. Pound, closing in closer, but nothing yet. My next major target is 119.65. And then if we get a close below 118.41, we trigger a double top pattern and it continues on lower. back to potentially the areas from the beginning of November. So that's pretty key right there. Bitcoin, this completed some Elliott wave stuff over this last week, so I'm starting to watch for a bigger pullback now in Bitcoin. Let's see where we sit. Yeah, it will be interesting this week for crude. On commodities, I got slammed on a long platinum with Friday job report. Broke through support 1980. Now it has triggered all sell technicals, copper as well. I would not be standing in front of some of these metals moves right now. Longer term, we're still in a platinum. Longer term, first target, second target hit in platinum. But the final target's not hit yet. It is still in play. Platinum coming into a major support area about 948 to about 965 area, but nothing I'd stand in front of right now. Hey, Dave, Sunshine Daydream. Anything happening on Natty Gas? The old Natty Gas. It looks like it's trying to form more of a waning momentum rounding bottom. But there's an aggressive buy signal above. We've completed back to the 87.5. Remember? And for anybody new, let me get the bigger picture with Natty Gas. We had this key major run-up with Ukraine, right? And Europe. Then we had the breakdown play, finally got the thing below the 62.5, which was a return to the 87.5, and we're into that major support area. What's interesting, if we did get a weekly reversal now above last week's high with a weekly close, it would be a %B weekly buy for potentially back to the weekly rotation zone. That's about the only thing bullish. I'm just curious here. I don't remember if I measured this out before. And yes, that it was technically a weekly double. And look where your next harmonic and key target is. So would I be overly bullish on this yet? No. But we get down to this 207 area. We got a harmonic cluster. You know, we got some pretty decent support here from weekly candles. Here's what I'm looking at just with that stuff. You see this base here. All right, let me zoom in here, show you exactly what I'm looking about. Base, support, becoming resistance, 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 resistance. Finally broke above it, and you remember to play above, break above, retest. Hold that level held, and then a breakaway move. Little sideways here, but really breakaway move. So that is some pretty key support. So you have a pure price action, key level, extension harmonic, and a double target, all in that area. So we get down to this key area right now, right around $2. We'll watch more substantially for a bottoming pattern. Other than that, if you got that weekly levels done, fine, but any play would be a potential still rollover play until we got down to those levels. Good question, though. Thank you. Mike the numbers, all the helpful information. Thank you for putting all this in. No, I did not do a deep dive into Amazon earnings other than they were ugly. I'm still watching. I'm surprised Amazon ran that much, but reconnected with the 200. I will be watching not yet for a key breakdown play because there's a fair amount of support. So if we still get go-go juice in this market coming and catches on this rotation zone, we'll be watching for a short-term bounce, but I'll be watching more substantially for a rollover topping play in Amazon. There just isn't one yet. I am not bullish on this, especially after this significant run-up. Significant run-up, and I mean, Amazon doesn't even have a PE anymore because it's got negative earnings. What else do we have? We catch the seasonal lows on natural gas. I will be keeping a close eye on that one. So that's where we stand. What else? Let's just take a look at the insane Apple from Friday again, in case you were living in a cave. There is not a topping pattern yet, but I will be watching if the market does roll over. There's a fair amount of support it broke through. Also, I want to state, if you didn't watch the live stream from Friday, a lot of tech buyback programs are kicking back in. So you do have some underlying bid in key stocks in the market. You do have underlying bid. That doesn't mean it has to keep the market held up, but that's why I'm not necessarily watching for a massive rollover play just yet. Because yes, we could pull back and end up in a more of a consolidation, chopping back and forth, playing these shorter multi-day swings, but we don't necessarily have the stage set for let's just load up the shorts. In this kind of market, it'll probably kick you in the shorts. Kathy's psychotic. Okay? I have no other way to put this. Her analysis, stuff she puts out, is literally does not make sense. And I'm not just talking the Bitcoin stuff. Even with her analysis with companies in her portfolio and how much her portfolio is going to grow by 2030, she has stuff. I mean, she had stuff growing bigger than the whole world economy combined. Oh, this, like her portfolio. Yeah, it's absurd. Christo shorted Apple, CRN, Nvidia, and JWN on Friday. Well, keep some tighter stops on that. All right. Nvidia, we could have a pullback. So, yeah, I don't have a problem with a short-term short, but keep in mind this has a lot, and I think this is incredibly, from a fundamental standpoint, got a lot of juice in it, but we still have a triggered bullish pattern. So, I'm expecting a pullback. So for me, from a short play, it would just be a pullback to the rotation zone. It has to do a lot of damage. It has to even get below, whether you're doing horizontal support or a neckline, it has to get well below this rotation zone before I'll be really looking for more short setups. Could we come down here, get a secondary bounce, and then set up a more corrective play? Yes. Now, Nvidia did have some we got a nice divergence here on Nvidia. So if Nvidia, I'm watching this 207.30 area. We break down below that, I'll be watching for a little pullback. If you're looking for short-term levels on Nvidia, this is where I'd watch for. This would be handy if you're trying to front run a short here. I'd be really keying off this $200.74. Why? Because you need a close below that to at least retest the low areas from the end of January. You want the Aussie? The Aussie? Well, I can tell you this much. Watching for this pullback potentially to about 68.25. You have a key major breakdown zone right above there. You have the weekly rotation zones. You have a daily double top triggered back on the 3rd right there. You have your rising daily 200 at 69. And that's the first target for this where we could get a bounce. So the first key support area you're watching is 69. Then the next two targets are 68.65 and 68.25. So there's your Aussie. On the overall bigger picture, look, now you have a harmonic, a 25% pullback harmonic right in that area too. So that's a fantastic place if you're short to definitely lower a stop. Your major support area, because this could be something that continues lower. You have a fair amount of support between this 37 and 50% harmonic, but this 66, 63 on a bigger, should this run continue lower, that's going to be a very key level. I don't think ChatGPT can do that, Mike. I don't think ChatGPT can hold a candle to all your numbers. Which channel are you watching? Because you're watching Restream on a YouTube. Which channel are you watching on, Mike? Are you watching on Pure Exposure? Because if you're watching on Pure Exposure, I might not be using Restream anymore, which means I'm just going to be streaming to my personal channel and to Path Trading Live. So you might want to start tuning into one of those. Can I use BNGO? Is that the only stock you care about? Dark screen. It hit the 200, never triggered the double top. There's not much to talk about. If you want your next levels higher, if it continues, 210 and 218. Other than that, I mean, you when we talked before, you said you had to get this back to what price that you're hoping for? Your miners, so look at how that lines up really nice with those harmonics. Your breakout support's 185. Your price action major harmonic support's 177, and you don't want to see it break below 169 if you're bullish. But you just ticked off the return to the 200 into your key major resistance area. So I mean, there's nothing besides it's off the lows, but I don't remember 9. You're going to need something quite significant to get to 9. Like I don't know, I don't follow them as a company. Bionanogenomics. So you'd need something like them to get approved by the FDA for something or something else. Because earnings are coming up when? March 16th. I'd have to look up to see if there's anything in the pipeline for them, but if you're open for a 9, you're going to need something to get released by the company. Other than that, It's just going to be in short-term trading back and forth. So you'd have to tell me if there's something in the pipeline from the FDA that can get approved. I don't follow this company. All right. What else do we sit with? I'm going to let everybody go for now. By the way, Microsoft is, I'm keeping an eye on this tomorrow morning for the open. Why? Because you see we have these two lows. We start breaking down below that. We have this little gap play. So if anybody's watched for short term, we have the gap play and we have the 200 right here and the rotation zone. So there's a really good potential pullback play here if it does break down. That's what I will be keeping an eye on. Also, Microsoft, you see with cycles at the top. So I'm keeping an eye, and that's not a long-term play. That's a short-term short play because it's still coming back into the daily rotation zone. When I drop, the course will come with a LinkedIn endorsement. I think you meant LinkedIn or LinkedIn certificate. I didn't even think of that. So I don't know. I'd have to look into that. All right. So that's where we stand today. Oh, we didn't look at Tesla. Everybody's favorite stock. Keep an eye on Tesla. Keep an eye on Tesla because it's got this little potential topping pattern. So if you get a 1 hour close below 182.61, you could see the pullback levels are 175.47, 172, and 168.46. Is that a major short? No, that's a minor pullback short. Where does that take it? Takes it back to the daily rotation zone. Doesn't even break the key support at 162. So that's the only thing that I'm keeping an eye on tomorrow, but we can glance at that with the pre-market tomorrow. The major next resistance, should it rotate back up, is back to 200 to 240. And then on a rally above that, if we still got go-go juice going on, it's 208.24. You're welcome, Anissa. All right, where do we sit? Good afternoon, Sterling. Man, there was a live stream yesterday with Elon, Kathy Wood, and Jack Dorsey talking about Tesla and Bitcoin. I missed that. So, Tesla 200 EMA. I don't follow the 200 EMA. Oh, there you go. 200 SMA. Yeah, I mean, it is still valid on that's rejecting up here. It's not only that, but look where it topped twice back in November, mid-November and beginning of December. This is key topping area. And that is, so you have the 4 hour 200 and it also is reacting to there. So that's what we have. All right. Any insights as one to these bizarre Tuesday, January 24th wide range bar caused by NSE glitch will be adjusted? No idea. No idea. Mr. Hamza, I already talked about the NASDAQ. Buy it at 12.3. I gave the pullback key levels earlier. 12.352, 12.257, 12.157. It's not an auto buy at any of those. I'd need some kind of reversal pattern, and that would take us back to the daily rotation zone. Then I'd be watching for the next secondary reaction back up. So would I just put in blind orders? No. You're coming back to a major support area down here within the rotation zone and a little short-term trend line coming up there. You see that? So you have a huge support zone down here. But I like watching for at least some kind of shorter reaction signal instead of just trying to randomly put in a buy order. Thank you, Charles. Thank you, Dave. With that, I shall see everyone 8 a.m. Central tomorrow morning. Have a fantastic rest of your day. Bye for now.